Understanding Robinhood taxes is crucial for investors using the popular trading platform. As a Robinhood user, you need to report your investment income to the IRS, and the platform provides the necessary tax documents to help you do so. First, let's cover the types of taxes you may owe on your Robinhood investments. These include capital gains tax, which applies to profits from selling stocks, options, or cryptocurrencies, and dividend tax, which applies to income earned from dividends paid by the companies you invest in. To prepare your taxes, Robinhood provides a 1099 tax form, which reports your investment income to the IRS. The form includes details such as your name, address, and the type of income you earned. You will receive a 1099 form if you had taxable activity on your Robinhood account, such as selling stocks or receiving dividends. When filing your taxes, you will need to report the information from your 1099 form on your tax return. You can do this by using tax software or consulting a tax professional. It is essential to keep accurate records of your investment activity, including purchase and sale dates, to ensure you report your income correctly. To minimize your tax liability, consider holding onto your investments for at least a year to qualify for long-term capital gains, which are typically taxed at a lower rate than short-term gains. Additionally, you can offset capital gains by selling losing positions, a strategy known as tax loss harvesting. In conclusion, understanding Robinhood taxes is essential for investors to report their income accurately and minimize their tax liability. By following these steps and best practices, you can navigate the tax process with confidence and make the most of your investments on the Robinhood platform.